So I don't think this is an issue of personality. I think it's a problem that people don't trust each other in the room. And when you don't trust each other,
right?
Exactly. But in the past, it was okay because Saudi Arabia was willing to be the swing producer. Now, with shale and other new production, Saudi Arabia is no longer willing to play that role. So when you don't have trust, you will not get an agreement. I'm actually surprised that the market was expecting an agreement.
Right. Right, to see this sell-off in oil prices.
Right, but it's a lot less. I mean, last night it was 6%, now it's 3%. I think we are going to put this behind us quite quickly.
Why do you think that?
Because I think we are seeing supply destruction going on. We're seeing some pickup in demand, and traders are getting used to the new reality of pricing, which is a little bit more volatile, but that doesn't indicate long-term trends. So I think you're going to see us volatile, but hanging around these levels.
Let's talk about the demand side, because when you look at some of the growth prospects here in the United States, when you look at other places around the globe, things haven't been great. It's been a pretty rough quarter, and I'm not sure what we can expect in the current quarter. What do you think?
And that was a message of the IMF World Bank meetings this weekend. I mean, it's amazing because there's now a general consensus. Growth will remain low and uneven. People are worried about risks they cannot quantify, like Brexit. And they agree on what needs to be done, and then it stops.
Right.
There isn't the next step, let's go and get it done. So yes, the prospects are going to be for low growth, and you're going to see central banks, particularly in Japan and Europe, try to do even more.
Will it be successful? Because negative interest rates to this point, it seemed like it hasn't worked at all the way they'd been hoping.
Will it be successful in boosting asset prices in the short term? Yes. Will it deliver growth? No. Does it come at a higher and higher risk of collateral damage? Absolutely. And you're seeing this already. You're seeing the damage that that negative interest rates are doing to the system. The system isn't built to operate with negative nominal rates.
Yeah, I mean, it's a kind of a crazy scenario to be paying somebody to hold your money. What is the damage that you're seeing play out? I know the financials have been hurt by this. In Japan, there's been lower trading activity. What do you think eventually plays out? So
3 things stand out immediately. One is you have whole sectors of finance that are there to provide long-term financial services, insurance, pension, certain banking activity. They simply can't do it at negative interest rates. And we cannot replace something with nothing. So we're going to have an impaired financial system. Secondly,
which means what for who? I mean, is this for the savers, the retirers?
Correct.
These are the ones who get crushed.
It means fewer long-term financial services that are credible for society. And that's a hit. Second, you're starting to see in Japan individuals disengage. They'd rather keep their money in the safe at home than disengaging. Third, the political risk of negative interest rates is very high because that's something that people can identify with. And as you said, it looks absurd. What do you mean? I'm going to lend you my money and I'm going to pay you interest? Give me a break. What's wrong with this system? So I worry that the longer we stay in this negative interest rates, the more the damage to the system.